Good afternoon, everybody. Good afternoon. Oh, if I could get a sound check, please, just make sure I'm coming through absolutely clear. That'd be great. Good afternoon, Scotty D. Good afternoon, Nadia. Good to see you. Hey, Bathori. Good to see you as well, buddy. Awesome. Hey, Michael. I sure did, man. Yeah, I sure did. I mean, to be fair, I was kind of in the room, in and around the mornings and the evenings to either cry myself to sleep or have a drink to celebrate the day's gains or losses. No, but I did. I got into a nice little routine with the streams and everything. So yeah, it was a bit strange not catching up so much. But it seemed like you guys did pretty well. You made the most of it. I cannot believe the performance for the month so far. Can't believe it. I went through just in my way that I am of being, incredibly, I don't know. British term is the British term is anal, but I don't know if that's going to ring true for you over in South America, Julian. I don't know about you, buddy, but we call it anal here. Fussy is another word, but I had to go through and I checked and double checked every single thing to make sure they were all absolutely spot on and right, and they are. It's been incredible. It's been a record breaking August. It really has. I mean, July was pretty damn good, but August has been just absolutely phenomenal. Now, over the course of my holiday, I sent out 35 positions. Over the course of those 35 positions, we incurred 14 losses, which leaves 21 wins, and we gained in total a 7.87% return across my holiday. That's the holiday returns, 7.87%. Absolutely outstanding, if I don't say so myself. Every single one of these obviously was based on a pending order. It had to be. And for me, I couldn't trade any other way, so it had to be pending orders, the lot of them. Apart from the occasional very, very risky market order from a mobile phone trading view app in an MT4 or MT5 even. So yeah, that was not fun. But yeah, I mean that happened maybe, I don't know, 4 times or something, 5 times out of the entire holiday. So yeah, I didn't really have to do that too much. But yeah, it was crazy. Yeah, crazy. But I think the most important thing to remember is more trades doesn't necessarily mean more gains, because there were a lot less trades provided, I think, the week before or the first week of August. And the first week of August, we did 8.47% return in that week. So more trades does not mean more gains, because there was a hell of a lot, there was a hell of a lot of trading. But still didn't beat that first week. But overall, very positive, very good. I know it's a bit of a double-edged sword, isn't it? With the whole, I freaking hate the word signals, to be honest. But there's no other way to sugarcoat it, really. That is what they are. It's a bit of a double-edged sword with the whole signal thing. Hey, good afternoon, James. Because, of course, if you're not there, 100% of the time to be taking them all, then you're not going to be making the most of it, and that's the thing. Obviously, I don't want anyone here to be a robot either. Doing your own due diligence and things like that is part of the job. So yeah, but hey, I'm not going to complain at the same time. I'm not going to complain. I mean, it's being away on holiday and working an hour and a half a day and being able to get those kind of returns, it's not too bad. It's not too bad. It helped you with the schedule, the way you did it. Well, I can imagine it did, but unfortunately for you, mate, I'm not going to be waking up at 5 o'clock a.m. GMT time to continue doing that. So I suppose you'll be looking forward to me going on holiday more often. Unfortunately though, I won't be. I won't be on holiday too often. But anyway, let's get going. Let's have a look at what's been going on. It's not exactly like I've missed too much as we've just said. I mean, I've been very present in the markets, to be honest. So it's going to be a little bit of a tiny little bit of a catch-up session, I guess, and then we can look at those US stocks, see what's going on in our FX space as well. We had some pretty serious things happening in assets like cable. My performance whilst away in cable was absolutely shite. Yeah, I mean, it was embarrassing. I have not felt so much of a retail trader for many, many, many months. I can't say years exactly because, I mean, chances are I'm probably forgetting another time where I have felt like a retail trader, but this cable is incredibly embarrassing because we look at this, right? What a beautiful run. Absolutely gorgeous bull run in cable. Look at the daily chart. The daily chart is phenomenal. Look at that daily time frame. Okay, now we've come back down here. We've hit this area. This isn't going to be like the greatest cash rich area. I probably wouldn't have articulated it as an excessively good cash rich area. This one right in the middle here. I mean, frankly, we don't even hit that low. It doesn't even come down to this area here. So maybe knock that up a notch to about there. And this is where we are. Now, there is definitely liquidity in the market here. We can see this via the retests, via the inflection points and price action. We can see the reaction it's having. Anyway, when we come down to this area, we hit this area, we break structure here at approximately 128, and we just get going. We just get pumping up. It's brilliant. It looks great. And the awesome thing is down in the 15-minute time frame, because of course on the 15, we get all those intricate little details and we can find out exactly where we want to be getting involved. Come on, TradingView, what are you doing? What the hell is going on here? Okay, just give TradingView a moment. Oh god, the entire thing's going down. Am I still on? Yeah, I'm still here. That's fine. Good afternoon, Paul. Good to see you, buddy. Michael, you took a long in it this morning and perfect exit. Good man. Well done. Well done indeed. So let's go back. TradingView's having a little bit of a funny 5 minutes. Here we go. Right, so beautiful bull running cable. Now, do you know what your commander-in-chief was doing? Every day he was away, every single day. Your commander-in-chief, your quote-unquote professional trader, was trying to pick tops in cable and was waiting for these inflection points to come to an end and doing 1 to 2s the whole entire way up the damn thing. I mean, bearing in mind, we didn't actually lose one trade. All right. Oh, hang on a minute. Wait, what the hell's going on? Whoa. Max been shorting the whole way up. Yeah, okay, right, fine, yeah. Thought it was me at the hospital. Must be Max's internet. Probably not paid his bill. I think he's been away. The sound is shit. Thank you for articulating that, mate. Right, just give me a second. No, that's absolutely fine, actually. That's okay. That's as it should be. PMP. Yeah, that is the one. Okay, all right. Okay, cool. Yeah, so in short, I was shorting the whole way up. Not a single one of these trades got triggered. Okay, I just want to make that absolutely clear. We didn't lose anything per se. But my entire cable methodology was to call the top of the market and to short the damn thing the whole way back down. And it's just gone. And by the time we get to here is now the time, probably, where we will see the really, really nice big short. And this is exactly at the point where I'm going to start telling you guys, let's go long. Let's jump in for a 1 to 3 long in cable. And this has probably now reached the turning point. So instead of actually offering that as a trade idea, I'm not going to do anything to do with cable. Cable for me right now is a bit of a bad omen. And so I'm just going to let that one rest and be as it should. Looking at the daily chart, we have not had a successful retest of our liquidity point here. And so I would imagine the cable to have a pretty decent price action pullback down to around 130.50 and then to continue upwards. The other thing to watch out for is this point here. Very, very cash rich area, okay? Not neutral whatsoever. That there would be the trade idea, okay? That's not a bad one whatsoever. So then you look at the breaker structure point, nice little price equilibrium space in there. Breaker structure is here, short the market underneath there. You have a risk area at 131.80 and then down to the target profit at 131.60. And then that's going to yield 50 pips or so, 55 pips. That's a nice short idea. But I'm not going to take it. That is, I'm not even offering that to you guys. That is just my analysis of cable right now. So yeah, it's embarrassing. I know it happens. These things, even to the best of us. So we can move swiftly on from there. Okay, the other one. So UK Brent. Again, very, very strong performance from this asset over the last couple of weeks. Very strong performance. We had a relatively semi-decent move to the downside. I say semi-decent. We had some really good days, but we also had days that was a complete grind fest. Obviously, we didn't want to be stuck around or anything like that. But once we reached where the previous low, okay, now this is not rocket science, guys. This is so easy to call, okay? We come down to a cash-rich area. Why is it cash-rich? Because it's a major inflection point. We can see the price action has just literally switched hands from this point here back up to the highs. We've come back down. What is the chances of the price action repeating the same thing again? Well, very, very probable. And what did I do in it? Nothing. Absolutely nothing. I did not miss this. I was looking at this, and I didn't get a single bean out of it. Right? No trade ideas were sent to you guys. No trade ideas were sent to my bank. Simple as that. And so I was really kicking myself for that one as well, because that was such a strong performer. It really was. It just did so well. So, cable. Still got cable on the mind. UK Brent now is at a relatively decent decision point, but not the decision point. UK Brent really needs to be coming up to this area in here at around 82.55-ish, which is the print that I want to see before the turning point comes. So what I expect is happening here is some profit taking for smaller individuals, not the institutionals. And then it's going to continue trading higher up to our point of liquidity at the highs here. So this area in there. That's what I expect for UK Brent. Now, once price action does end up coming up to around 82.35, I will be intending to short it all the way back down to 76.17. Now, this will have a ridiculous risk to reward ratio. So I'm not entirely sure if I want to be taking the entire thing straight off the bat. I mean, frankly, this won't be a short trade. It will be something that's kind of concluded over maybe 4 to 6 days, trading days. So that's another thing that has to be taken into account. And so that's going to be your breaker structure entry. The market will rally through up to cash, dump, reallocate, take off. Now you may get a break close retest of this area. This whole thing is your choice. And for me, inflection point here, 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 here. Big, big area. Much more so than this little one in here. And so therefore for me, I will be executing on the BOS and not on the BCR, which means I can set this little one up as a pending order. Now the only thing that we really need to ascertain here is the TP. The TP is explicitly clear. It's down at 76. It's pretty straightforward. But I've got to think about the price-time ratio here. The price-time ratio is long. If I execute the trade in here, I'm going to be looking at least it holding onto this one until maybe, I don't know, 5-6 days. And I'm just not entirely sure I'm comfortable leaving money in oil that long, at the moment at least. Now my stop loss for this one naturally would be about here, which means my risk reward ratio is going to be 1 to 6.16. That's too big for me. I don't like things like that. I love people who show me these trades and they're like, yeah, man, got my 1 to 15 today in gold, or I got my 1 to 25 and whatever it was, and they're all over YouTube. They're great, these guys. I envy them so much. I wish I could be that good. But alas, I'm not. I'm a humble trader. And so I will probably have my stop loss way up above there for a 1 to 3. And that will be what I go for if this is the full-blown trade that I wish to take. If I had my stop loss down at around this area, or the 50% point between these two, then I would have my TB significantly higher, and I would be aiming for the gap that you can see here, which was never filled. And that's really interesting because we never actually filled this gap before we had the rally up. So I should expect this to be filled at some point. Now, if I fill that gap with a zone and drag that zone off to the right there, have the target profit on top of that zone, we're now looking at a 1 to 2.6, which is definitely something I'm interested in and I want to get involved in. That's my kind of bread and butter, as you guys all well know. So 1 to 2.6 on that one is probably what I'm going to go for first. And then we're going to get a BCR of this area here. We're going to get a breaker structure, and then I will be looking at taking a second trade, part 2, from this area after a BCR all the way down to the TP there for a really, really nice risk reward of approximately 1 to 3.8. Now, this is very, very speculative. At the end of the day, I expect a BCR from this one, and so therefore I'm expecting my entry to be a little bit more relaxed. Obviously, you're going to have the A entry, you're going to have the C entry, aggressive, conservative. But I would expect to get somewhere in around this area. So then down to my TP, my entry is probably going to be, I don't know, maybe it could be even as low as there at 78.90. It could be as high as up here at around 79.26. I just don't know yet. I think the conservative, which is the beginning of the price action pullback for the retest, and that's for conservative entry, I believe that that's going to be where I want to get involved. So maybe looking at a 1 to 2.5 or something. That's a really, really healthy stop loss, so we might be able to dip that one down just a touch and maybe go for a 1 to 2.8, and they would be both of my oil trades. But I'm not looking for any kind of short, any kind of participation period, unless the market hits 82.65 or 82.60-ish. 82.60, sorry, not 82.65. 82.60, so we can get up into that cash-rich area, get the reallocation, the distribution of the funds, and then we start our leg down. That's the only time where I'm going to start to get interested in oil. So I don't need to really worry about it now for a while. We can put a pending in the market here. We've got at least another 24 hours trading before the market gets back up there and starts its leg down again, by which time I will have all of your lovely faces on the next day's stream. Maybe the morning. It might be the morning in terms of when I have to tell you to short it. It may not. I'm not entirely sure yet, but I won't let it go. So that's the plan for Brent. Now, another one that's been actually really quite decent. Lots and lots of nice impulsive correctives since I've been away. And amazingly, not a single profitable trading. Actually, no, I tell a lie. There was one, wasn't there? We did get one win in gold. One single win. And I think it was something so pathetic. It was a tiny little move to the upside. I think it was here. I think this was it, the 22nd. And we had this little breaker structure in here. And it was done and dusted. The whole thing was a win and over with in like the first 10 minutes that I launched the signal. So I think it was probably there. And then it comes back down, and that was the other trade I did that I didn't take. So yeah, that one there. But that was it. No other gold. I think we had one other gold trade that triggered and it was a loss, and that was it. None of the others that I provided in gold ever came close to triggering, unfortunately. Actually, on reflection, to be honest, I was looking back here thinking that that was the leg that we'd had in gold since I'd been away, but no, it wasn't, because I left on the 16th or 17th. And frankly, from that point in time, gold's been pretty crap. So I'm not going to be too hard on myself about that, because yeah, this is not very good price action. This is a bunch of crap here. We had that very, 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 very slow and gradual little hike up here, and then it's just basically been Mr. Sideways the entire time. So no, gold's not really been too much of a strong contender here, has it? But that's about it. I mean, in terms of sort of doing any deeper dive in gold at the moment, I don't think it's really necessary. At the end of the day, I'm very bullish gold, and gold's been rallying with the United States dollar, and now it's rallying against the United States dollar. So I just think gold's on a massive bull run. I mean, like I said, 28.50, maybe even 3K, up and around this area is my call for gold over the course of the next, I don't know, 6 months to a year, 6 to 12 months. I'd be looking at 3,000 for gold. So honest trajectory at the moment. It's getting ever closer to that goal. Looking at it from a sort of cash neutrality area, we've got BCRs going on liquidity here at the moment. BCR, we haven't really had any fresh breaker structure. This candle failed. Probably would have been a bull trade idea, to be honest, on the daily chart, but it's come back down. It's not really doing anything at the moment. And it does look like we're sort of accumulating here at this stage before we start the run up to the upside. So back down to the 15-minute time frame. If you are looking to buy into gold, then it would definitely be a wise choice to probably consider buy side areas at around 24.80. I wouldn't really consider longing gold from 25.10 where we are at the moment, or any higher. So remember, our objective here is to be as fussy as possible. Don't settle for anything less than absolute perfection with your level of entry. If you don't want to get into gold until it gets down to 24.80, then you stick with that, and that's good. That's what I'm doing here. So 24.80 down to this area. That's where I'm interested. That's where I want to be buying into it. And so if it doesn't get down there, then that's that. If it continues going, let's say for example, if we get a fresh breaker structure across here, then I will be interested in buying it after a break close and a retest of that. Okay, obviously, I'm not going to sit on my hands for 24.80 for the next 10 years. But I'm saying in its current market state structure as it is right now, 24.80 is the area that I want to buy from. Okay, let's have a couple of picks out in the FX space. Now, the Aussie CAD, upon review of the positions that we did, has done extremely well for us. In fact, it's had a really good win-loss ratio, this one in particular. I don't know how, looking back at it from the 19th. I mean, it's been okay, right? We've had these little bit of rallies leading into consolidation areas, but it's been quite consistent with it. We haven't actually made any fresh highs, so it's basically just kind of ran sideways for a while. But it has been really good. I mean, it's been really consistent. And from this area at the moment, we've got a really, really solid floor that's starting to form. Now, we've got liquidity in here. We've got the retest here. So if I then zone across the side of that and drag that one off to the side, that's the floor that we're working with. Now, we do have indication of ever so slight higher highs being formed here. And we don't want to ignore that. We do want to kind of stick to it. So if we kind of stick to this motion here, we can use that as a general guideline as to an area that price action may actually start bouncing and continuing its way to the upside. But I think it's so finely correlated at the moment to this supply and demand zone that coming into it here and then breaking above is going to be enough for me. Now, the breaker structure for a long here is going to be basically where the price line is at the moment. Now, if you guys can see back in time, we've got some pretty decent stuff going on in price action here. So that makes quite a nice floor, again, for the breaker structure, right? So we've got this big point here where price is sort of traded into, and then bang, we get the big takeoff. So that breaks the block and up it goes. We've got nice sort of inflection points here, break close retest as well in this area before it trades higher. and now in price we've come down. We've used this area as a floor for a while. We get a bit of a fake out, sort of dip down into big liquidity before bouncing out. So this is really, really nice breaker structure area. So what my theory is here, or my plan, should I say more precisely, is for the price action to come back down, stick its toes in the water. It can go anywhere in this space, come back up and break structure. Now, as soon as we get to this area here and we break through this white line, we can then take the long, and I'd be looking for a TP of approximately 91.50. I don't know if I would actually put my money bang on the 91.50 area now. If we go back in time, you see this area here? You see that retest? And so we get this point here, we get this big break above, and then it retests once, retests twice, and then gets going. That's the kind of area that I'd be looking for. So then I'd probably be looking for a TP. Let me just line this up. Probably about there. Lag. Oh. What's going on? I've got a full... Oh, seriously? Oh yeah, I can see. Yeah, 918 ms. Now I'm full signal again. That's weird. Yeah, it's strange. I'm not entirely sure what's going on. It could be... It could be I don't know. I have no idea what it could be actually. I'm trying to think. Nothing's going on that I know of. Everything else is running fine. Maybe it's a Discord thing. Maybe Discord's running a bit slow today. Yeah, ChatGPT's always making excuses for me. That's why I've got him here, mate. That's it. That's its sole purpose. All right, I'll continue on. Let me know. Let me know what happens. So Aussie CAD breaker structure area at around 91.30. That's the trade right there. So then we're looking at around a 1 to 2 standard UTC trade. Target profit going to be about here. Stop loss going to be about there. 1 to 2.35 risk reward ratio. Really nice little setup. I like that one. I'm not going to do every single one. I'll do some more tomorrow as well. So again, maybe I need to reset the router. Yeah, it's Discord actually tells me the strength of the stream, and it's 981 millisecond lag. So that's terrible. I mean, if I'm gaming, I usually game with about a 7 ms ping, and it's pinging now at 22, but it's spiking all over the place. Well, sorry guys. Yeah, sorry, I'm not entirely sure. Maybe it's feeding off my brain. I feel like my brain's probably got a 918 ms ping today. Alright, we'll carry on, see what we can do. So, Euro-Oz. Again, really nice market with the floor at the moment, and it's at the floor, which is the best thing. So, nice big 15-minute floor. Really nice area liquidity up here as well of a previous. Well, I wouldn't be looking to take this one to the previous highs. Probably I'd be looking to take this one not even that far at all actually. Maybe just to like here. That would be the TP point for the EA. So we would be counting on this one coming back down first. If we could get it to come back down first, that would be ideal. Now the breaker structure area was here. Okay, that was the breaker structure for the long. So guys, honestly, you've probably got quite a good opportunity in this one very, very soon. I'd be looking at something like that. So it's that there. Yeah, something like that. Let's go down to the 1 minute time frame here and check this out. Okay, so we've got this area in here. Come back down and retest that now. Now currently you've got A entry, which is here at 164.73, and you've got C entry at 164.78. And to be honest, the C entry is not going to give you a good risk-reward ratio. It just won't. So if you are a naturally conservative trader, you're going to have to strap on your big boy shoes with the aggressive entry on this one, I think, if it triggers. If we end up trading all the way back down here, then that's golden. That's really what we want in an ideal world, because then we're going to get the full flow of the breaker structure area. So we've just broken through this area. So that's now out. And now we're retesting the original BOS area. Now the breaker structure for this one from this point here is there. Right? So now that we've come down and we retest, 10 seconds to go. Yeah. Right. Euro was long. First trade back in the hot seat. That's the parameters. Okay, we're looking at a 1 to 2.55 on this one. Only a small trade, really. Looking for the trade I did at 165.026. Back up at the highs. We have a technical risk area here. Naturally, always at the 50% point between the margins you're looking to trade in. And that's there. Now, if we can get a breakout above this area, then excellent. That's good work. If we don't, then you guys, not me, okay, I don't speak for myself here because I'll just stay in the trade no matter what. And that is down to you if you want to do that, but you will be able to manage it if you so wish, if you feel the market's coming down too far and you get a counter breaker structure. Remember guys, you know, the whole portfolio based on set and forget trades, okay? Don't get into a habit of exiting trades too early due to loss aversion. Now, I've spoken to pretty much most of you about this in private, in one-to-one sessions in some format along the way. Trade management is not the same as loss aversion or having psychological struggles. Okay, trade management is a profession in itself. So if you are exiting trades early, it needs to be systematic in approach. Okay, so you need to say to yourself, here is a structural point in price action. That is, without a shadow of a doubt, a structural point on a 1 minute chart. So if the price action comes up here and we range for ages, then there's no problem at all. That's absolutely fine. We could do that for days. Doesn't mean anything. If the market comes down below here, but then comes back for its retest and fails the retest, then that's absolutely fine. We could do that for days. If the market comes up to this area, comes down here, comes back, retests, breaks structure at this area and comes down and make a low down here at 164.72, get out the trade. Why are you going to get out the trade for a tiny loss here instead of the full loss down here? Because the market is telling you it's not going higher, it's going lower. And stop losses are all there for a reason, but it doesn't mean we need to let the market always trigger them. Now, the only reason, as you well know, the only reason I leave all my trades set and forget is because I have no choice if I want the portfolio tracking to work. So that's that. But anyway, I'm just making that clear. I'm just putting that out there. Always make sure you have an exit strategy as part of your trading plan, not just an entry strategy. Getting the BCR here in real time as well as we speak. Anyway, that trade's on. So we'll see where we go. Euro USD, no. Cable, definitely not. NZD USD, what are you looking like at the moment? A bit brutal, really. A little bit choppy. USD CAD short, yeah, not bad. That looks spicy, actually. So we've got price line liquidity there. So that's quite nice. Yeah, I'm a fan. I like this. We do have a technical risk factor, however, just below. I don't like that, the reason there. So probably this. So in order to take this trade, oh yeah, of course, because then that one's higher than this one, and then that one's lower than this one. Not the best setup, not the absolute best, but I think not bad at the same time. So, breaker structure point is going to be here. No retest of this required. The reason I'm not going to go for a BCR of this, because it does deserve the necessary respect, but the reason I'm not is because we'll already be through this one. So if we make it through this one and we make it through this one, then I'm pretty confident that we're going to probably go down right to the very bottom. So then we'll open up a short. Breaker structure is going to be about there. Target profit down at the previous lows, and the stop loss is going to be bang in the middle of these two zones. Zone 1 and Zone 2, 50% of the two for a 1 to 2.14 risk-reward ratio. That's going to be that one, guys. These markets are moving quite quick now, so I'm going to have to be quick on the trigger if you wish to take them. Okay, let's take a good look. Stop loss 134.707. Entry 134.686. Target profit 134.641. Right, there you go. Right. 7 minutes past 2, so let's get rocking and rolling with our US stocks. So the US stock markets over the course of my holiday have been pretty violent, I would say, for the most part. Very, very aggressive waves, lots of intermittent trading in between, but the breakouts have been very thick and very fast. We've had extremely fast moving markets for the hour or two around the market open, then leading and spreading out into quite consistent sort of hikes or drops thereafter. So, these sort of very, very big sort of violent breakouts, and then trading off into these kind of grindy market state structures into the second half of the US trading sessions. We see this quite consistently. I know we've had some pretty big events happening as well. Whilst I've been away, I've been keeping as much of an attention to them as I needed to, but not anything past that point. But the market opens, I think, for the most part, have been pretty decent. They've been okay. Now, today, because of where we're trading, if we look on the daily time frame, especially for this NAS 100 here, we made a significant gain to the previous highs, but we haven't actually quite reached there yet. And interestingly enough, we've got this anchor point running through here, which I don't think this is too thin for it. And we're actually now breaking through the bottom. I don't think that's too thin. Does anyone else think that's too thin? I mean, I'm not sure. I don't know. It could be wider, I guess, a little bit. I just don't think that needs to be any wider than it is. And the market looks like it's going to go for a failed retest. That's just the way I see it. It's just what it looks like to me. It looks like it's going to be a failed retest. And so today, we could be looking at a move down. If we have this order block here, right? So if we look at the top of the block, which is about there, this is the margin that I'm expecting to trade today with the NAS 100. Now, there's no real fundamental reason I'm short the stocks. Not today. Not today in particular. It's a Monday. But that's the margin before we get down. So very, very short and concise trade idea today. Like I say, we've got 20 minutes exactly to go. I'm looking for a breakout of this area in here. I'm looking for a TP at the roof of the zone below at 1926. And I'm looking for my stop loss to be somewhere above this zone. So, short, below, target, stop loss, 1 to 3.43. That would be the trade idea. Now remember, we still have 20 minutes to go. This is a 1 minute chart. So I would be potentially expecting the market wants to get down to this area in here to travel on sideways and just to kind of relax a little bit before dropping down. But that's me wishing. I mean, frankly, because that would be the perfect setup for us all. We can't say if that's going to happen or not. So that this 1 to 3.43, excuse me, at the moment could look very, very different by the time we actually, get invested. So once the market comes down, if it does come down to this area, hopefully it trades sideways. We market order this at the market open, so long as the market sort of shoots through. This can be a pending order, but I only want you to set the pending, very, very close to the market open time. Let's say the market open, Let's say the market open, 2:30, obviously GMT, whatever that is, 20 minutes time from now. You could put a pending in it 3 minutes 2 or something, or 2 minutes 2, and just get that in somewhere around there. Possibly. But really, guys, at the end of the day, I'm all about the market orders at market opens. It's just one of those things. I don't really like using pending orders for this kind of trading. When you need to have your money, you need to have your eye on the ball. And so that's the trade. Now this trade idea might turn out to be a 1 to 2 because obviously the entry to it becomes lower. So if we trade off lower, get a break close retest, and then we've still got a few minutes to the market open, this trade is then going to, it'll still be quite nice. It'll still be quite good. It could still potentially be a 1 to 3.35, but anyway, I don't want to go off that. We're just kind of speculating, but that's the trade idea for the NAS 100 at the moment, the short. So the long, and yes, we do have a trade idea on both sides of the market today. The long is going to be above this area in here. Okay, that's where the long's going to be. Now this one, it's a break, close, and a retest on 1 minute chart. All right, full BCR, full swing, not 15 minute though, 1 minute. And we're going to be looking at taking it right the way back up to this area here. So it's a 1 minute break, close, retest inside here. And then we're going to be looking at the rally all the way back up to the highs. So wherever the break, close, retest finishes and you manage to market order to get yourself into it, that's probably going to be the kind of trade that you're looking at. So maybe a 1 to 1.82. Now obviously that is nowhere near as fun as the short that we've lined up today, but that's just the nature of the game. So that's the NAS. Now over to the US 30 Dow Jones. The US 30 Dow Jones is, based on this very different position than the NAS. We haven't been trading lower for a while yet. We've had a pretty good sell-off today, this morning, but that's about it. Now the short, again, is probably going to be the nice option. Now, if we look at this is one hell of a floor in this 15 minute time frame short right here. So if we get the reversal away from here, at the moment it looks like we've got a bit of a fake out going on. But if it does start to trade lower, then the next low point for a TP, even though this is very unoptimistic for me, is going to be there. And that's where I'll be shorting it to. So then we've got the breaker structure below. And then we look to take the short down to 41.093. Now that's the trade. That's the trade I've got on offer. So what I would be thinking, if I were you on the other side of the screens here, is, well, hang on a minute. If this is the short that's available in the Dow Jones today that Max is liking, and he's not really liking anything more, and this is a 1 to 2 if I squeeze it, maybe a 1 to 1.85 or something realistically, then I don't want to take that Dow Jones short. I want to take the NAS short, and that's exactly what you should be thinking. Not thinking about taking all of them at the same time, but thinking about the fact that the NAS has a higher ROI. But the thing about the US 30 Dow Jones is it has a better long opportunity. Now, if we look at this area in here, and then along to this one, and then along to all of these, and the breakout retests, and the break under retests, and the breakout and retests, and so on and so forth, we drag this one right the way across, and we get this point here as well, looking really good. Now we've got a very, very nice long opportunity on the table as well. We do have a technical risk factor, but market open volumes, I'm hoping, will be okay. Now, so long as the market stays in and around this area, which is going to be acting as the no man's land, let's just articulate that very well. NML. Okay, no man's land in here. What I'm looking at for the long today is the breaker structure above here, the target profit up at the highs, and the stop loss genuinely doesn't need to be anywhere else like than there. So that's a 1 to 3 realistically in the Dow Jones right here. Problem is the damn thing's taking off with ours. And that's just what happens sometimes. We've got another area in here, and we'll be looking at just as good a trade, to be honest. Because even if we get the entry up there, the stop loss is then going to be here. Okay, that's nowhere near as nice as the first one, frankly. Nowhere near. But it's still a decent trade. It's still better than the long that we had in the NAS. So that's the long from there. I'll copy and paste that because there is the other long, of course, from this area here. And that one, obviously, a 1 to 3.3 or a 1 to 3 score ratio is definitely quite nice. But you guys, you can't be beggars or choosers, okay? You've got to take whatever the market gives you. And that's what I'll be looking at for the US 30 Dow Jones. So, ladies and gentlemen, are you ready? Are you prepared for this afternoon's trading session? You got your plans in place? It's 2:17, so you can get yourselves a coffee. Yep, okie dokie. Ready. Good man, good man. Yep, no problem at all, buddy. My pleasure as always. Now remember, guys, I'm going to hammer home about the reviews. I'm really wanting some lovely reviews, as long as they are honest reviews, on my WOP page, the WOP Marketplace. So if you haven't left a review yet, and you've been a member for longer than 4 days, which I'm pretty sure most of you have, please leave the reviews. Thanks, guys. And I will wrap things up there. Yeah, I know you have. So those who have already left a review, thank you very much. It is greatly appreciated. Okay, guys. Well, I hope you have a fantastic day today. Good luck out there in the markets. I will be around and present throughout the day as well, trading away. So if you are here and want to share your trades or whatever, please feel please do, ultimately. So have a good one, and I look forward to catching you then. And if you think I'm shit, then just don't leave a review, mate. You know, just don't worry about doing that review. It's fine. You don't need to do a review. All right, take care, guys. Have a good one. I'll see you then. Bye-bye.